Hi, everyone. I'm Denise Garth, Chief Strategy Officer at Majesco, and you're listening to the Future of Insurance Industry Leaders podcast series. Follow along as I interview the best and brightest leaders in the insurance industry and insurtech landscape to bring you the latest in digital transformation, innovation, industry trends, challenges, and opportunities, as well as next-gen technologies. We use our experience to anticipate what's next without losing sight of what's now. Stay tuned to find out your next now. Welcome, everybody, to 2025. I am thrilled today to have a dear friend who I've gotten to know over the last probably 2 to 3 years, Kyung, who now is the CEO and founder of NextGen Underwriting. Jen has an amazing background in underwriting on the P&C side, across all lines of business and as Chief Underwriting Officer. And this is going to be a fun podcast because in this day and age for P&C, underwriting is key for everything. So welcome, Jen.
Thanks, Denise. I'm so excited to be here. Thanks for having me on the Future of Insurance.
Yeah, I always like to start out because I always think everybody knows everybody, but I find out they don't. So why don't you give a little background on yourself and your current focus?
Thank you. Well, I can't believe it, but I've been in the insurance industry over 30 years, focused on underwriting, the topic of the day. And actually, I fell into it. It was a career that was recommended to me when I was back at Northwestern from a classmate. And I took the leap and I haven't looked back. It's been a lot of fun. What I found in underwriting is that you can manage your own business, your own P&L. It's like running everything, right? When you're an underwriter, it's fantastic. But I've spent time both in underwriting and on the operations side, on the carrier side, as well as consulting at some global underwriting practices. I've had a variety of leadership roles. At Zurich North America, I had a number of roles in underwriting quality, product management, underwriting field support and operations. I even led the development of the North American headquarters outside of Chicago. That was my one non-underwriting role. Fun story and amazing experience, probably for a different time. But as Denise mentioned, also most recently, I was the Chief Underwriting Officer at USAA Insurance. Currently, I've taken a new leap. I'm the CEO and founder of NextGen Underwriting, my new venture where I'm focused on thought leadership, consulting, advisory services for commercial and personal lines underwriting teams. And it's a really fun time to actually bring together my consulting background and my carrier experience with all the merging capabilities that are in the marketplace right now to advise and talk about new solutions for the amazing industry that we're in.
It really is amazing. And, we were together in November at the Joint Industry Forum. We had a lot of conversations, and there were a lot of panel conversations about the pressures and challenges of all these macroeconomic factors, the increased costs, particularly around claims, the challenge of combined ratios, operating performance, all in terms of also increasing risk and expanding risk, along with technology and AI and Gen AI, which we'll get to in a little bit. All of these are really telling insurers to really respond to improve operationally and innovatively. What do you see the focus, and are carriers spending enough time and resource to keep pace, Jen?
Yeah, Denise, you're hitting on it, and you're right. This has been the topic at many recent conferences where in the industry there's a number of factors converging all at once, and it's making it an especially challenging and volatile environment. I think what we've learned over the past couple of years that as an industry, with the volatility that we've seen, we can't possibly predict and know every scenario that's going to happen, right? Like we couldn't have predicted the insane inflation that we had, or some of the supply chain disruptions and how globally connected we are, some of the legal system abuse, how radical that's become. Like we couldn't predict some of that. But I think what we can do, and as underwriters, the good news is we're used to being prepared, being agile, and managing risk, right? That's what we do. We can start to plan out some different scenarios, sensitivity, but the way that we do that is to invest in our capabilities so that we can be ready, so that we can be more agile. And I would say that we aren't quite investing enough in some of those core capabilities to be ready. We're a bit too reactive in the industry. I think that if we spend more time and resource dedicating to building up our capabilities, we'll be able to pull levers much more quickly when the next thing occurs. And like, what do I mean by a core capability? I mean things like data and using models, which I know is that is part of the buzzwords today and how we're looking at AI and data. But I do think investing in how we ingest and test and learn rapidly what data is effective and which we should use against our books will help us then be able to pull that lever later to give us a lift in the marketplace when we need to. Investing in things like core technology and digital enablement to make sure our platforms are ready for customer-focused transactions. And I say that being like ease of use is key, along with safeguards and guardrails, right? Like that's something we need to stay. Fundamentals, like things like products and coverages that are fit for purpose with our evolving landscape of risks. Mitigation techniques, how we think about risk mitigation to provide value for insureds and be clear about what they need to do to improve risk. And then I would say, of course, talent. We need to continuously invest in our talent, be opportunistic with bringing on talent. And I would say invest in new talent coming out of college to make sure that we are providing the right development and exciting opportunities for our new professionals to join us, right? Denise, in this world that we're in that we find exciting because there's so much to do. So I would say there's tremendous opportunity for us to continue and invest more in these core capabilities so that we can be more ready, because we can't possibly predict all of the things that are going to occur, as you and I have seen, right?
With all the change that's going on, one thing that kind of stays the same is that underwriting is at the heart of the insurance business.
Yep.
And underwriting will always be there. But how we underwrite and the approach that we take to underwriting and how we make decisions needs to change, to some of your points. So evaluating individual risks, which has always been traditionally what we do, we still need to do that, but we need to understand that in terms of the broader portfolio as well. And do we want to take on that risk? Does it put the whole portfolio at risk from a profitability standpoint? Because you're too concentrated in a certain risk, maybe a certain geo, whatever it may be. And making those business decisions to be able to grow the book of business, because you might be able to take on some of that risk and grow the book of business because it's okay. How can this be accomplished? Because we've got challenges and limitations in how we've always done business. One of the things that I just hate, well, this is how we've always done it. Well,
right.
It doesn't necessarily work in today's world.
That's
so
right.
How do you see underwriting needing to change to meet today's demands? You kind of think about the thought leadership and the consulting that you're doing, Jen.
Yeah, thank you. And thanks for saying that underwriting is the heart. I agree. And I guess profitable growth is really the holy grail, right, of insurance and underwriting. We're always seeking to achieve that. I think, underwriters by nature are inquisitive. They are detectives, and that's in their nature, but also in the training that we instill in underwriters as they grow up in the industry. And as underwriters are running their own P&L and looking at each individual risk, they're using that curious mindset to continuously improve the book of business. So I think as we go forward, I think the opportunity that we have is to merge that curious mindset, merge our underwriters as detectives more so with data and analytics, as well as creative products and solutions. And so I think first, underwriting is as good as the availability and accuracy of the information and data coming to the underwriter, right? So the data and insights. I would say the underwriting, it's continued to evolve, and in a good way, the availability of data, the accuracy of the data has been getting much better. It's come a very long way, especially on the personal line side. As you think about the amount of innovation in this area, it's been rapid. For example, aerial imagery for property, telematics for auto. We were seeing the ability to gain new insights and to apply those to underwriting and pricing considerations, which is great for our underwriters. I think secondly, underwriters are looking for that ability to generate completely new insights to help them with new recommendations on how to shape their book for profitable growth. And I think there's a better opportunity to leverage data and analytics, AI models in new and accessible ways to generate recommendations for underwriters to explore. So this could mean things like recommendations for new pockets of growth, for risk mitigation options, for book shaping, I think we need to be more greenfield in thinking about how to give our underwriters the tools to experiment on this insight generation. I also think, in addition to data and analytics, underwriters need to develop to create more creative solutions going forward, especially given the volatility of risk that we talked about a bit earlier. I always recommend that underwriters have a very strong foundation in the basics: policy coverages, risk management, pricing. But in addition to that, with their curious mindset, then they have the opportunity to develop new products and services, coverages, to provide enhanced solutions to insureds while mitigating risk. So I think that marrying that creativity with the risk mitigation mindset will need to be elevated a bit as we move forward. And then to help underwriters do all of this, we actually have to free them up from the lower value work. We have to free them up so that they can spend the time on using the analytics, on that critical questioning and decisioning. So we owe it in the industry to our underwriters to provide that greater efficiency so that they can shift their time to data analytics. It's a really exciting time for underwriters. I think that they continue to be grounded in the basics and their craft of underwriting, while marrying that with spending more time and getting more comfortable with data and analytics and using that to their benefit to identify these new insights to help them with profitable growth.
One of the things too, with all the change that's been going on and the rising cost of claims and the rising risks in some, risk categories, it's really put pressure on, and what's really kind of over the last 18 months become really hot is pricing and rating solutions. Because the idea that we're just going to price it and it's going to be out there for a couple of years, those days are gone, and that some pricing could be changing pretty darn regularly,
Yes.
sometimes potentially monthly. And that's a real big kind of dynamic change for insurers to think that they're going to change pricing and rating that often. And in cases where it's got to be submitted for approval in the states, that creates another element of challenge. But, in the specialty area, that's not necessarily the case, that they can kind of make those changes pretty rapidly. And that plays a big part in what is needed from an underwriting standpoint. What are you seeing? Are you seeing that continuing into this next year, Jen?
Absolutely. I would say that the rating, pricing, and I would add underwriting are ways we have to actually get far more precise in the data that we're using. And to your point, like the pace at which we're comfortable making changes to that so that we can be proactive. Because like we've seen in the recent past, right? There's been so many changes, and the ability to be able to move more quickly and get changes into market more quickly is really, really critical. So I think that part of that is greater precision in greater number of variables, the ability to test those variables very quickly. And I like this concept of like a data factory or a data machine where we're able to, methodically and quickly get through the testing of that. And I think that what I'm also seeing in the space is we need more accessibility for those roles in pricing and underwriting, to have accessibility to data analytics tools that are easily usable for them. I would say that, in today's world, there's maybe a business intelligence or a data visualization tool with a moderate set of data. But as we all know, like these are super time consuming for underwriters or pricing folks to use, or they have to wait in line with a data request for a data analytics resource to become available, to prioritize their requests and do the deeper analysis. And we have to, as an industry, make the data and analytics tools far more accessible to many more business resources so that they can go in and perform that set of analytics with the hypotheses that they have, right, to test on that. And I think that the other thing that I'm seeing is the ability for those roles to perform scenario-based planning for pricing and underwriting, so that when they do have an insight, a new idea, they can test that themselves very quickly against their book of business and determine potential scenarios of how they might implement that and what those impacts might be to help them with what those decision points need to be going forward. So I see it as an entire construct or ecosystem right around pricing and underwriting, of giving and enabling our underwriters and pricing folks to be able to perform those analytics, help inform their decisions so that they can implement far more quickly.
One of the things that I think where technology, you've hit on it, is really playing an increasing role in underwriting is where we've always had and will continue to have within a policy admin system, pricing, rating, and you underwrite, for a policy, and it can happen right there. But increasingly, a next generation underwriting workbench is becoming crucial because it's more than just that policy. It goes back to that portfolio, or it goes back to, for this specific policy, because of the certain types of risks, I want to pull in different models that are going to kind of be leveraged in here from an analytics perspective and a data perspective to give me that kind of risk score. And so I see this whole emergence of underwriting workbenches, and these are not simple technology implementations. These are complex because everybody kind of has their view of how they want to kind of pull it all together to not just look at the portfolio and the individual risk, but also possibly collaborate with the agents or brokers in that process as well. So kind of give your perspective on where you see underwriting going from an underwriting workbench technology perspective.
Yeah, Denise, I totally agree with you. Like, I am so excited to see the evolution that's occurred over the past several years, because to your point, I think it started as policy administration, and now it's evolved to a much more holistic set of capabilities, including an underwriter workbench. And it's far more holistic than it ever has been. So first of all, I'm super excited about the direction of the industry and where things have come. So that's making me very happy. Now I think, and you hit on it, now we're evolving to that next set of sophistication for the underwriters. And I think it's pretty cool to see what's happened in terms of underwriting workflow and the capabilities, including documentation and helping underwriters prioritize their work and prioritize submissions. And now we can evolve it and it can move to the next level to incorporate deeper insights. And so I think about that in a couple of ways. One is, like we mentioned, to create greater efficiency in the workflow. So meaning more insights can help us with even further advanced triage, further advanced prioritization, much greater data aggregation from internal and external data sources to bring more information to the underwriter's fingertips more quickly to help them with that analytics and the decision-making process. The second part is bringing, like I mentioned earlier, this concept of analytical tools in a more accessible way to underwriters so that they can perform what I would call book optimization analytics to create new insights and to continuously manage that P&L or run their own business, which is the exciting part for underwriters, right? To get in there and manage that. So I do think that amazing progress. So excited to see that in the industry. Now I think it's the next step to elevate it to the next point of greater sophistication.
One of the other areas that kind of ties into all of this that we've been touching a little bit on is this whole concept of data and AI machine learning. Now, that's been around for a long period of time. And we've all had data strategies where we were going to create an enterprise data warehouse and do some models against it for reporting or whatever it may be. But it has changed so dramatically that really we've got to rethink how we look at a data strategy today. And in terms of that, we also have to rethink how we're leveraging AI machine learning to be able to leverage that data. So where do you see the tremendous value and potential real innovation to rethink this stuff versus what we've done the last decade or two?
Yeah, no, you're right. And I'm chuckling at the fact of like the enterprise data warehouse. And that that's right.
How many have we had and failed with?
How many, right? And data is at the heart. Like I mentioned at the very beginning, data is the heart of what fuels support enablement for the underwriter. And I think that the good news is the data availability and accuracy has come a very long way. There are many more viable options today than there were even 3 years ago, 5 years ago. So now more of the challenge is there's an overwhelming amount of data out there that needs to be tested. And so I think part of the data strategy is to determine, as a carrier for your line of business, what are the highest priority data information gaps? And what then are the data sources that we might need to fill what those gaps are? And there needs to be a strategy around how we do that, because data, as we all know, behaves very differently across books of business and carriers, right? There's so many data sources, and many vendors will claim that the data will fit everybody. We know it doesn't. We know that there's work there to do. And I think when carriers are setting up a data strategy, then given that and given the abundance of the data sources, a fundamental part of that strategy should be creating this data factory or data machine. And what I mean by that is setting up a very methodical approach and a dedicated set of resources that can identify the gaps, the potential sources, ingest that new data, and very rapidly test it to determine which of those are viable and will give the team the most lift. That then will make it so much easier for the business team then to make decisions on that and to determine which partnerships or alignment with vendors and start to move through the procurement process. So I think that's really what, as part of a data strategy, yes, there needs to be a place to put the data, but this methodical approach, this data factory approach, I think is really critical. And I think it's not just for external data. I mean, I would recommend that for internal data as well. I mean, as carriers, we have a tremendous amount of internal data that I would argue is just very untouched. We think about our claims data and the typical gap between underwriting and claims. There's so much potential there for our underwriting or policy side of the house to mine through claims data. I don't believe it's been sufficiently mined. I don't believe we've really dug into that or leveraged that data enough to gain actionable insights. So I would argue that our data factory approach should be used with our internal data as well as with the external data to methodically move through that and come out with new recommendations.
Yeah, absolutely. One of the things you touched on, and it's been kind of one of my hot buttons the last 2 or 3 years as one of my trends, is this whole concept of risk resilience. And I know the III and the Joint Industry Forum and the institutes, and they've been really focused in on this as well about prevention and mitigation and creating risk resilience. We've got a lot of legacy business methods and technologies that we haven't really kind of advanced. And, one of those simple ones is loss control. We've used loss control for high value properties or high risk areas because we put boots on the ground, to go out and make that assessment. Well, technology is pretty darn easy today, and that you could actually do a self-survey and the customer could send in pictures.
Yes.
Or you could actually do video type of thing and using AI machine learning to be able to assess those pictures coming in and that video coming in and be able to have that risk assessment. We can do a broader swath of that portfolio today in a really cost-effective way that gives the insurer a much better perspective of really what are they sitting on an overall risk perspective, that they can also negotiate better reinsurance prices then.
Yes.
But we haven't seemed to kind of rethink what it is that we've always done. So talk about what you're seeing as challenging traditional business processes to drive that risk resilience. Because one of the things I think also, Jen and I had this conversation with a customer, leveraging that loss control report that says, here are your risk areas, give that to the customer and give them a recommendation on what they could do.
Yeah.
So that the next time around, you can say, okay, did you do this, this, and this? And that could have an impact on your pricing.
Absolutely. I'm so glad you're bringing this up. And I love the term risk resilience. I also love the concept of shared responsibility because, and I think we need to shift the conversation to that it's not just a one-sided, it's all on the carrier, right? This is a shared responsibility. And to your point, I think that customers, insureds are craving information and recommendations so that they have power, so that they know the things that they can do, that they can take action to mitigate their costs and to mitigate their risk long term. And I think that what we've been hearing in the marketplace in general is that consumers want more transparency into what they're getting for what they're paying for. As we know, rates have gone up. I mean, seeing they're starting to come a bit back down, right? That's good news, great. But rates overall have gone up and consumers are saying, what am I getting for this? I need more value. And I think as carriers, and you bring up a great point, we have much greater insights today, whether it's loss control reports, whether it's the virtual surveys that are happening or the aerial images. We have so much more information. There is a great opportunity for us to leverage AI and ML to mine through that to provide recommendations that then an underwriter can partner with that insured on what are the most effective ways that that insured can take action in order to mitigate their risk long term, in order to help with their prices long term. I think this is a very new mindset that we need to shift the conversation in the industry around shared responsibility, around how we work on this together, how we work on long-term resilience. And I think we can leverage technology to help us with that. I think we can leverage the new AI technology that's out there today to help us sort through the massive amounts of information that we have to provide recommendations and to help with creative solutions as we go forward. Because like we talked about, I think that with the volatility in the marketplace, with the volatility of weather and the lack of predictability, we can't just say no. We can't just walk away from risk. We have to get to more creative solutions around resilience, risk mitigation, and partnering with our insureds to determine how we're there for each other long term.
Yeah, and I think the other reason is it's needed by our customers, because unfortunately with the price increases, we've got customers now that have gaps of protection. They decrease their coverages, or they increase their deductibles, and the cost of insurance. In fact, it was an article, I think, in the Wall Street Journal sometime in the last month, that many people, the cost of their insurance and their property taxes is more than their mortgage. And that's a scary statement, and why people aren't able to afford their homes now. That's not good for the customers because it puts them at risk, but it's also not good for the insurance industry because it's not necessarily great for our brand. Our mission is to help provide coverage for risk and to make people whole. But if it costs so much to do that, people are beginning to pull back and say, maybe I do something different. And that's not going to be good either. Would you agree on that?
I totally agree. Affordability is one of the main issues that we're facing right now. And I agree with you. What concerns me is that then insureds will decide to underinsure, and they will make decisions that will leave them not appropriately protected when a crisis occurs. And we don't want that. We want folks to ensure that they have the right protection, and we want to, in the industry, help them with the information they need, like we just said, like to help with their risk mitigation, to help long term, right? So we need to find more creative ways or more creative products that'll help balance that affordability. And I think this is a group play, it's a team play, right? It's not just carriers. We're going to need to work with regulators and policymakers and insurtechs and climate firms, right? We need to look across many different stakeholders to help brainstorm on this. I do think that the affordability, it's very concerning, but it's something that we can work on together as an industry across the different stakeholders. I love the idea of it being a team play.
I do too. And it really gets back to that concept of shared responsibility that you talked about. And I think if we take that approach, I think people are much more collaborative and will be open to new ideas and rethinking the approach that they take.
Absolutely.
So, Jenna, one thing I like to do when I end up each of the podcasts is I'd like you to kind of pick one word or phrase to describe the future of insurance, and what would it be? So what would yours be?
My word would be elevate.
Oh, I love that.
We've made such great progress, like we've talked about here. We've made great strides in underwriting and with our technology and our data. But now we are at that point where we can elevate it even to the next level. We need to up our game. We need to up our game with greater insights, data analytics, creative solutions for insureds, like we just talked about. We are at that point where great progress, but time to elevate. And we owe that in the industry to our underwriters. We owe our underwriters more tools, more solutions. We owe it to them to free them up to be able to spend time to elevate their game. So I see it as a responsibility that we have in the industry. So that would be my word, elevate.
I love that. I love that. And you're right. With the pace of change, and particularly technology, we have to constantly kind of elevate what it is that we're doing. We can't stay comfortable, I guess, is the idea. Well, thank you, Jen. It's been great. I'm looking forward to, I'm sure I'll see you at one of the conferences and maybe we'll be on another panel together, but thanks for all of your insights and the work that you do in the industry to really kind of push things forward, and looking forward to a great 2025 where hopefully underwriting comes front and center in a lot of new ways.
Thanks, Denise. Thank you so much for having me. Great conversation as always, and we'll see you on the conference trail.
Okay, sounds great. Thank you. That's it for this week's episode of Future of Insurance Industry Leaders podcast. Subscribe to our market-leading podcast series, available wherever you get your podcast from. Thank you for listening, and be sure to tune in the next time.